few weeks ago, my boy Glinton commented on one of my videos saying that I should check out Fulgent Genetics. And so I did. I'm really glad that he brought this up. This is one of the best, most undervalued genomic stock that I have ever seen. And this is exactly why I poured $700 and turned this into $1,200 over the past few weeks. Let's talk about it. Hi y'all, my name is Greg and I make videos about the stock market and options trading. Today we're talking all about Fulgent Genetics, ticker FLGT. So in this video, I'm going to be giving you an overview of what this company does, then look at their stock. After that, we'll look into their financials and why I see this as a great opportunity. And finally, I'm going to give you some of the drawbacks that I've seen with this company that kept me from going all in, gung-ho, putting everything I have into this single stock. But before we get into it, if you enjoy this type of video where I put in a ton of research, I'd appreciate if you would leave a like on this video and subscribe if you're new to the channel. Fulgent Genetics is a genomics company, obviously, but they're not like every other company that I've seen in this space. They're kind of like the Home Depot of genomics. If you want to build a house, you're not going to go to a nail store, a hammer store, a flooring store. You're going to go to Home Depot because they have everything, right? Fulgent Genetics also has everything in one place. Maybe not nails and hammers, but they do have a lot of things that are related to genetics. They have an array of products and services ranging from genes and panels, genomic testing, tumor profiling, and sequencing services. One of their proprietary products that they offer is their panels. Their panels allow you to know specifically about the disease that you're interested in rather than giving you a shotgun approach. Now they have the tools if you want a complete comprehensive analysis and you want to look at everything, but their panels allow you to look at specific diseases. So let's say, for example, you have a family history of cardiovascular disease, or you have some reason to suspect that you might have one. If you want to learn more about cardiovascular disease, the risks associated with it, and also the preventative measures you can take, they have panels specifically for that. And that's just one of the proprietary technologies that they offer. Another great one is their solid tumor molecular profiling. This looks at current and upcoming clinical trials to give the most up-to-date information to doctors. This way, clinicians that are specializing in cancer can give the best available treatments to their patients. And finally, one of their newest and latest technologies that this company is offering is illness testing. This testing service allows you to have a test directly shipped to your front door. That way you can take the test, package it up, send it to the clinic, and once the clinic has received it, you'll get your results within 24 to 48 hours. And I know what you might say, Greg, isn't the illness just going to be going away? And well, yes, eventually, once we have herd immunity, the illness will be eradicated. But getting to actual herd immunity and eradicating this virus might take longer than we expect. Vaccine distribution has been incredibly inefficient so far, and there's just some people that don't want to take the vaccine. All the meanwhile, while we're not at herd immunity yet, this virus is still out and about, mutating itself and continuing to spread. We're still going to need testing. Now, I don't know how long this is going to last, but Fulgent is taking full advantage of this opportunity and they're raking in a ton of profits. It's honestly very impressive to see how quickly they were able to adapt and come up with this new testing service, and I think that this can mostly be attributed to their wide variety of products and services. So now I've given you a gist of what this company does exactly. And now I want to talk about their stock. Just in the past week, FLGT has climbed by over 60%, and over the past month, it's climbed by over 120%. I started buying Fulgent around 2 to 3 weeks ago, and just within those few weeks, I've got a 65% total return. As I look more and more into this company, I kept buying the dips that I saw for FLGT, and now I've built up a $1,200 position in this single stock. Now, I'm by no means an expert, and this percent return doesn't prove that, but there are a few actual stock experts that have given their take on Fulgent recently. Of the 4 different stock analysts that are covering the stock right now, 2 of them say that you should buy Fulgent, one says that you should hold Fulgent, and there's one naysayer saying that you should sell. This sell analysis came from Erin Wright from Credit Suisse, and this is what she had to say. We expect demand for Fulgent's illness test to deteriorate in the second half of 2021 and thereon. And honestly, I can stand behind that. I do think that over time they're going to be receiving less and less revenue from their illness testing. But something that Credit Suisse failed to give in this analysis is what this profit is actually going towards. returns. If they were to put most or all of this profit into research and development, there's a whole lot more room for profitability and growth. A couple analysts that are covering Fulgent right now are saying that the stock is a buy, and these ratings came within the last few days. Kevin DeGeeter from Oppenheimer maintained his buy rating at a $130 price target, and Stephen Ma also maintained his buy rating at a $135 price target. And these two analysts have some really good track records, and you can check that out over on TipRanks. Erin Wright, the sell analyst on the stock, also ranks pretty well. But if you compare her returns to that of Kevin and Stephen, she's a little bit behind. And honestly, I think that even Kevin and Stephen are wrong about the stock with their $130 price targets. Personally, I think that the stock is a 3x opportunity, since they're basically a direct competitor to Invitae, ticker NVTA. Invitae has a market cap of around $10 billion, meanwhile Fulgent is around $3 billion. So this leaves them a little more than 3x opportunity for growth. Both Fulgent and Invitae offer similar products with genetic testing, illness testing, and genetic panels. So if we make a direct comparison here, apples to apples, Fulgent should be worth $10 billion, not $3 billion. And honestly, I think that they may have an advantage over Invitae because Fulgent is actually profitable. Let's go look at their financials. According to Fulgent's most recent balance sheet, they're basically able to print money like their Fetcher pal himself. They went from having just $12 million in December of 2019 all the way to having $53 million of cash in September of 2020. That's more than a 4x growth for their cash pile in a matter of just 9 months. A lot of this likely stemmed from them offering up their illness testing, and there's nothing wrong with that. They took advantage of a market opportunity and they executed perfectly. Along with piling up all this money like they're a bank, they also increased their liabilities from just $90 million in December 2019 all the way to $247 million in liabilities in September of 2020. And this is where it starts to get a little bit tricky. On one hand, they piled up a lot of money by offering their illness test, they built up a lot of cash, but at the same time, they took on a whole lot more debt. They increased their accounts payable from $1.6 million in December of 2019 all the way to almost $19 million by September of 2020. And they also increased their total liabilities from $6 million, just shy of that, all the way to $60 million within 9 months. That's a tenfold increase just in terms of their debt. Now, I think this is in part due to the new facility that they opened up in Houston, but I'm not exactly sure 100% where this money is going. But we can actually look at their statement below to try to get an idea at least. For the 9 months ended September 30th, they ended up increasing their research and development costs from $4.7 million all the way to $7 million by September of 2020. And that's generally where you want money to be spent, especially when it comes to these younger companies that aren't well established yet. They ended up increasing their R&D by a factor of around 70%, which is great to see. Another pretty significant increase that they saw in their spending was in general and administrative. And I'm assuming because they opened a new facility, they had to hire on more people, and this is where that money might have ended up going. They increased these costs from $4.7 million in 2019 to $7.5 million in September 2020. And I guess that this is totally understandable. If you have to hire on new employees, you're going to have to put more money down in general and administrative. But I'd like to know how much more money is going towards their executive team. Did they get some sort of raise? Did they get a huge bonus? We really don't know here. Personally, as somebody who invests into this company, I'd like to see more money put towards research and development over general and administrative costs. And considering that we saw a pretty similar increase in both of these costs, I think that more money should be allocated towards R&D. Overall, though, this company is great at turning a profit now. This company ended up going from losing $115,000 back in December of 2019 all the way to making $48 million over the past 9 months. And a lot of that came from this quarter alone, in quarter 3, posting $46 million of profit for the 3 months ending September 30th of 2020. This ended up driving their earnings per share from just 8 cents for the third quarter of 2019 all the way to $2.11 for the third quarter of 2020. And honestly, if that doesn't make you believe in the company's growth,
I'm not sure what will. But I do have to admit, though, there are a few drawbacks that kept me from going all in, putting everything I have into this single stock.
First, the spending and the debt that they've taken on over the past 6 months has been pretty crazy. I'm really curious to get an even deeper breakdown of where this money is going exactly and why they increased their debt by tenfold. It's pretty normal to see though, especially with a younger company and especially in an economy like we're in right now with the Fed setting 0% interest rates and borrowing being extremely cheap. I really hope that Fulgent is using this profit accordingly and paying off their debts. In my opinion, this should be the focus of the company's financials over the next few years. Hopefully Fulgent is taking advantage of this, paying off those debts, and hopefully they have a huge wad of cash by 2023. Ideally, I'd like to see this company have next to no liabilities similar to what they had back in 2019, and hopefully from all the profits that Fulgent is raking in right now, they can use this to put towards their cash pile, maybe even tripling or quadrupling it from $53 million right now to almost $200 million by 2023. This kind of cash would allow them to thrive and continue innovating when a lot of other companies might fall behind. This would be an absolute power move, and I think this will give them the credibility that they need to take on Invitae. Another thing that I think that Fulgent can improve upon is their PR team. Now, I'm not trying to knock them in the slightest, but if you compare their PR team to that of Bionano Genomics, there's a lot of room for improvement here. The issue that I see with Fulgent right now is they're not well known, and this is probably due to the fact that they don't get a lot of press. Their last press release from their website was all the way from January 6th, which is over 3 weeks ago. The ones before that were on December 29th, December 17th, and December 4th, and so on. Meanwhile, companies like Bionano Genomics have been taking full advantage of this hot market and posting press releases pretty much every single day. The more press that your company gives out, the more popular your stock will be, and in turn, the more volume your stock will see. Just as a comparison here, today, just within the first hour of trading, B&GO stock has been traded over 10 million times. Meanwhile, Fulgent has been traded around 800,000 times. And I think that this is mostly because not a lot of people know about the stock, which is evident whenever you search for FLGT stock on YouTube. The most relevant video that I found was a few days ago, and the one before that was over 2 weeks ago by Mr. Dividend Investor. Great channel, by the way. And the video before that was from Bill Neal, which was over a month ago. So clearly, not a lot of people are talking about this stock, and I think they're not getting the recognition that they deserve. And I honestly hope that this can change. Another way you might be able to come to this conclusion is comparing the two Twitter pages between B&GO and Fulgent. Fulgent Genetics only has around 1,000 followers, and their last tweet was all the way from December 5th. So clearly they need to get with the times since this is a new day and age of information, and they need to get on board with this. So if I were in the PR team or the investor relations team, this would be my main focus. Make sure that the company's name is being heard, get your name out there to new investors looking for stocks in the genomic space, and let your company and your stock thrive. Honestly, I think if you were to combine Bionano Genomics' PR team with Fulgent's technology, you'd probably get the best genomic stock there is. So if you're watching this and you're part of the IR or PR team over at Fulgent Genetics, I think that it would be in the company and investors' best interest to get the word out there about what this company is doing and also maybe tweet a little more often. But that's just the two drawbacks that I've seen and what they can improve on. I might be missing something here. Let me know down in the comments below if I missed anything negative or positive about this company and what they're doing. And with all that said, that's everything I have for you on Fulgent Genetics, the best, most undervalued genomic stock in my opinion. Thank you for making it all the way to the end of this video. Thank you to all my patrons for your support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye guys.